So we'll get going, everybody. Thank you very much for those who are attending this morning. My name is Ben Carter, and I'll give a short introduction to myself in a moment. But I'm very, very pleased to be delivering this month's SEC Town Hall to you, which is part of the World Investor Week, which got kicked off just a day or two ago. I think this year is the 8th year that the Securities and Exchange Commission has taken part in the World Investor Week. Part of the remit of the Securities and Exchange Commission is to protect the citizens of Zambia against fraud and scams. And I think my presentation fits into that model, we can say. So what we're going to be talking about today is the situation that follows a decision by an investor to invest. He's made the decision to commit some of his money to one or another investment. He doesn't really know how to go about that, and he's searching for advice and help to enable him to do it. So today's presentation explains how to do that safely and securely. So what should you expect from your investment advisor? So I like to start off my presentation with little stories, and when you get to my age, you've got a lot of them. So today's little story, just to get us started, is a short one, but very pertinent. Back in 1996, I was working in Dubai in the UAE, and I was driving somewhere, and as usually happens in Dubai, I got in a traffic jam. And looking around, I spotted a large brass plaque on a doorway just over by the pavement. And I read this plaque, and I found it highly amusing because it said Dr. Ravi Shankar, MD, so it was a doctor's clinic. And then under his name, there were the immortal words, University of Bombay failed. And I remember thinking, well, I hope I don't fall ill in this part of Dubai in the future, because I'm really not sure what kind of medical attention I'm going to get from Dr. Ravi, who actually failed his medical degree. At least he was an honest man and had the courage to say so. But there's a truism there, isn't there? If your body falls ill, you need a doctor who's passed his exams. And you can be confident that he can look after you. It's exactly the same with your money. You need to be talking to an investment advisor who is not only qualified, but there are a number of other criteria which we're going to look at that give you the confidence that he's going to be looking after your money and your affairs correctly and safely. And the big way is do not leave your money and your investment decisions to chance, because there are a lot of wolves out there, and the worst wolves of all don't have four legs, they have two. So this is a presentation about how to avoid the wolves. Okay, so a little bit about me. I'm an Englishman living here in Zambia. I've been an offshore wealth manager for nearly 30 years. Here in Zambia, I'm running the Lusaka office of Caravel Partners. I actually founded this company back in 2010. And our business is helping individuals, families, and businesses to invest their money offshore. So we're operating in the offshore part of the market. Nevertheless, we have to be, and we are regulated by SEC, and our license number is there. So what I want to say before we get into the meat of it is that what I say today applies not only to individual investment advisors, but also to investment advisory firms, whether they're working just in the Zambian local market or the international market via the offshore route. So some remarks are very pertinent to individuals, others to the firm for whom they're working, for which they're working. But whether you're a Zambian investment advisor or more of taking more of an international stance, the rules are the same. So we should start, I guess, with talking about what an investment advisor actually does for you. What is the role of the advisor? A quick word about the phrase investment advisor. Here in Zambia, the formal official title of the regulated and licensed individual is investment advisor. You will hear other words used: financial advisor, advisor on its own, consultant. And these words really, I think, reflect the different functions of a good quality investment advisor. And these really are three. The process with a client for Caravel, and I'm sure everybody else, starts off really with the investment advisor actually wearing a financial advisor's hat. And here you're talking with your client about what are the financial goals that he's trying to achieve. They need to be identified. They then need to be analysed and measured and have numbers put on them, and that determines how the process continues. So here in Zambia, what we see very, very often are, for instance, regular savings, which are very, very often used for and aimed at educating children at university. Most often, of course, in Zambia itself, but also sometimes South Africa, the UK, or elsewhere. So all of these targets need to be costed and measured and actually identified. Sometimes the client doesn't actually fully understand, what they're trying to achieve. So it's the financial advisor's role, wearing his first hat, if you like, to make sure those goals are identified and then costed and measured. So once that process is done, you swap hats and you put on your true investment advisor hat. Here, a good advisor is trying to help the client apply the right methodology and investment assets so that the individual can reach the goals and objectives that have already been identified. But there is a third hat as well, and many advisors, this is perhaps where some people fall down or it gets ignored, and it mustn't be ignored. I mean, let me try and give you an example. Let's say that somebody has made an investment in 2006. I choose that date for a reason, and then just kind of walks away, and the client has his investment, and nobody's monitoring it, nobody is looking at it. And then the 2007 2008 financial crisis hits, and no action is taken by the advisor on the client's behalf. Well, what would the client see? He would see a decline in his portfolio value by about 45 to 50%. That's what happened in 2008. And so the third role of a good advisor is to actually act as a money manager. And that means that there is, first of all, regular monitoring going on. The advisor is looking at market conditions, at the macroeconomic situation as it develops in the world. And his aim is to be protecting the client's value. And that's real work, and it takes some time, but all too often, I'm afraid, it gets ignored. And I will give one concrete example of that. I once had a client who had a large amount of money invested with a private bank in Switzerland. And 2008 occurred, and the bank, to my astonishment, when he told me this story, took absolutely no action at all. They didn't move his portfolio into safer assets in response to the crisis that occurred. And indeed, he saw his portfolio decline that year by 50%. If you're coming up for retirement, for instance, would be an absolute disaster. So the money management role is crucial and is fundamental, but so are the other two. I am often asked, which one of those is the most important? And you can find reasons for saying one or the other maybe has a priority or a greater importance, but actually all three, I think, are of crucial importance. So when you're looking for an investment advisor, you need somebody who can accurately identify and cost your objectives and help you identify them. He needs to be able to provide you with the right investment methodology and mix of assets to reach your goals, but then he needs to manage it thereafter on your behalf. So the truth is that not all investors are equally effective. So let's look for the rest of the presentation at the kind of criteria that you can apply in your search for a good advisor who will be able to help you in your situation and then give you effective ongoing service. So the very, very first one, and back to our Dr. Kumar, or whatever his name was, in Dubai, he's got to be able to say that he's got the relevant qualifications and that he's actually passed them. So credentials do matter, they really do. And if your advisor has the relevant qualifications, then or you're pretty sure that he has the technical knowledge and the commitment as well to adhering to regulatory and industry standards. The expertise, I think there are other factors at play, and we'll come to those in future slides. Here in Zambia, as I'm sure most attendees to this presentation know, both the investment advisory firm and the individual advisor need to be licensed and regulated by the Securities and Exchange Commission. And it really is crucial because the client then knows that the advisor is working with systems and procedures that should guide and protect the investment process. And also that the individual and the firm itself are accountable. And that's also crucial. Here in Zambia, there are both administrative and even criminal penalties that can be applied by the regulator in the case of misadventure. And we must be accountable, and the client must understand that. So yes, both the firm and the individual advisor must be regulated. And you can easily check that by looking at the Commission website, where you should find both the firm's name and the individual advisor's name listed. Now, advisors in Zambia, they must have as a minimum the stockbroker and investment advisory qualification from the Zambian College of Insurance Trust, and they must be members of the Capital Markets Association as well. And you should find those certificates on the wall in their office. But it doesn't end there. There are many other qualifications that it would be good if your advisor had them. And one crucial one, I think, nowadays is the International Wealth Management qualification from the CISI, which is the Chartered Institute of Securities and Investment, which is in London. Many, many years ago, before the CISI existed, it was the Chartered Insurance Institute, also in London, which provided international wealth managers with qualifications. But CISI has completely overtaken them, is offering world-class qualifications. Now, SEC have worked with the CISI for many, many years. There was a memorandum of understanding signed between the two of them as far back as 2016. And in fact, this year, 2024, the CISI has signed an agreement with a college here in Lusaka to actually offer the qualifications through study here in Lusaka. Many people do those qualifications online, but they can actually be studied at college here in Zambia now. So when you're searching for a good advisor, uh, try to ensure that they've got kind of, one or another of CISI qualification. But so credentials do matter, but it doesn't end there. So experience, of course, is the other major element. Credentials give you the first level of safety, but they're not the only indicator of an advisor's ability to help. Now, in any profession at all, experience, so it can't be hurried up. The clock ticks its own time. But obviously, if you're a investor looking to invest, you want to be sure that everything's going to be all right. Not only must your advisor be qualified, but he or she should also have some experience. In my personal experience, I could say, in all humility, it took me about 5 or 6 years before I really knew what I was doing. Yes, I was fine with retirement planning. I was fine with education fee planning and with those clients who were investing what we would small lump sums. But in dealing with very high net worth individuals, ultra high net worth individuals, it was years before I was ready even to deal with them. And that's just a matter of not only technical knowledge, but experience. So it's a commonsensical thing to say, I know, but nevertheless, it needs to be pointed out. There are easier situations and ones where greater experience is crucial. So, for instance, an education fee plan versus a very large fund-based portfolio, for instance, they're completely different animals. And for the latter, the second of those, you need to be talking to an advisor with experience. So then how do you go about evaluating the experience? And these are questions that you can ask your prospective advisor. How long have you been an advisor? How long have you been practicing the profession? I think 5 years is absolutely ideal. Maybe there aren't so many people in Zambia with that length of experience. There are certainly some. But, the more experience, frankly, the better. In my case, it was a good 5 years before I felt really proficient. Client base. It's not really the number of clients. It's more does your advisor have the clients that mirror your kind of situation? And can he or she provide any references from those existing clients? I personally would always be looking for references, whether I was dealing with a lawyer or an accountant. And, it's the same with an investment advisor. It would be better if you could get him to supply you with 2 or 3 references from existing clients. Another question to ask is, how much money are you managing? And for the client investing larger amounts of money, this I think is an important question because, again, it shows you as an investor that the firm is able to deal with you, has experience, and is worth. It's certainly worth asking the question. You may not always get an answer, but that's the evaluating the experience of your advisor. Those 3 areas. Now, in this presentation, we're going to hear the word risk several times, and it's absolutely crucial and central to an investment advisor's work. And it comes really in 2 forms. The first one is your advisor capable of measuring your risk profile as an investor? Some people by nature are very, very cautious. Others are much more adventurous. And I remember vividly one client I had many, many years ago. And in the first meeting I had with him, I was really quite shocked to see that he had 2 black eyes and cuts all over his face. And I asked, what on earth has happened to you? And he said, well, my hobby is driving Formula 3 cars. And I was in a race last week and had a crash. And needless to say, he was probably the most adventurous and aggressive client I ever had. He really liked risk and he welcomed it. There are very few people like that, I'm glad to say, because I'm a pretty fellow myself. And most people fall in the middle. They want good growth of their money, but they don't want their capital to be at any great risk. So that risk profile does need to be measured. Now, part of it is indeed that second point there, the emotional level of the client in terms of handling risk. So some people are just naturally very conservative and cautious, but that is not the only measure. The investment time horizon is crucial. How much time has the client available to have his money kept invested? The longer that time horizon, the more aggressive, theoretically, he can afford to be. Because if the markets fall, then it's a truism that the market can go down, stock price can go down, a fund unit price can go down, but what goes down comes up. Actually, it works the other way around as well. So the more time you've got, the more time you've got to recover, even from a 2008 situation, and you can theoretically at least be a little bit more aggressive. How old is the client? The life cycle phase. If one is dealing with an older individual who's got 2 or 3 years to go before retirement, you're hardly likely to be taking serious risk with his capital. This individual wants his capital protected. Whereas somebody who's 30 years old, he's still got 20 or 25 or 30 years to go before his retirement. There's a different phase of the life cycle, and you can afford to be more aggressive. So there are other elements that go into the measurement of risk profile. But for the investor, this is another question to ask your advisor. How does your company and how do you go about measuring my risk profile? And if they kind of look at you blankly, maybe it would be better to look for somebody else. Here at Caravel, we do it via a risk profiler. It's actually a questionnaire which asks a lot of questions about different investment scenarios, and then you tot up the score at the end of it, and that gives you an indication about the prospective investors' risk profile. That's how it's usually done. So the advice you receive also must be personalised. If somebody comes into your office and slaps a brochure down on the desk and says, there you go, really, that's nowhere near good enough, is it? You don't want to be just given the same old thing as somebody else has been given. Your situation is personal, and the advice you receive should be tailored to your personal situation. So that's point number one, cookie cutter advice. No, thank you. I want you to advise me based on my personal or family situation. And ongoing, I think it's also important to have an advisor who can really get to know you as a person as time goes on, and develops a deep understanding of your personal life and your situation, because all of this impacts, potentially at least, on the type of assets and the type of investment methodology you would use. So personalization of advice, don't forget that. A good advisory company, I think, also has a broad range of investment options for you. Things do change in time, right? And you may need to amend things. A new child comes along, you perhaps need to look at some life insurance to cover that child, or amend something else that you've got in your overall portfolio. So it's important that the advisory company that you're dealing with can offer you a good range of investment options, which are going to cover different needs as you grow through your life. Keywords, I think, for investors nowadays are flexibility. and maybe particularly here in Africa, where people may need to access funds quickly in the event of a medical or other emergency. So flexibility is a crucial one, I think, when looking at your different investment methodologies or products. Risk again, and not only risk but fees. Yeah, transparency. I know the Securities and Exchange Commission, quite rightly, are insistent upon full disclosure and transparency. That's, of course, 100% right. You have to know how much the advice is costing you. There are different models available depending on the type of investment, how much is being invested. It might be, as is the case in the UK now, almost completely a fee-based arrangement, plus maybe an ongoing management charge. It may be a commission basis, but whatever it is, ensure that you know what that fee structure is and that it's explained to you. You can then gain some idea of what value you're receiving from your advisor in return for placing your investment with him. And risk, and we're going to talk more about risk in a moment, but risk must be addressed in writing. And this specifically relates to the assets that are being secured to you and for purchase. You must understand what the risk of them is. And again, the point I want to make here is that it should be in writing. We'll talk more about that in a moment. So fees and risk, make sure you know what they are. Yeah, so here we go. So I mentioned that there are two measurements of risk that your advisor needs to be able to deal with, and you need to be satisfied that he or she can do so. So the first one is the measurement of your personal appetite for risk. We've already covered that. But equally important, and probably maybe even more important, is that the advisor's got to know what is the true nature of the risk of the assets that he is presenting to you. So risk reward is what we're talking about, the possible profit that particular investment activity may make in relation to the risk involved in doing so. So something with a good investment risk reward ratio would be something that actually, when you look into it, it's actually is very secure. It gives you a high return. And the worst one would be one where it's not at all safe, but actually doesn't give you much reward for that risk. So risk reward is absolutely central to the work that a good investment advisor should be doing for you. So you can just ask him some questions. Maybe tell me what the fundamental asset classes are, and he should be able to say cash, bonds, equities, and alternatives. It's crucial to question and to try to gain confidence that your advisor does understand what risk reward is and can disclose it to you. And then ongoing, what reporting and information is the advisor going to make available to you? Here at Caravel, we give quarterly reports to our clients, even those who are just investing in a long-term savings plan. But that's not the only form of communication. Clients should be able to log in directly to the investment company's portal with a confidential login and password, so that the account valuation can be checked at any time. And in fact, all of at least in the offshore world, all of the product providers provide that service. It didn't used to be the case, but I guess the internet has changed everything in our industry as it has in others. So ongoing reporting, what are you going to provide me on an ongoing basis? How can we review my portfolio? How often do we do that, and what form does it take? All good questions for your prospective advisor. Documentation also, I think this is really crucial as well. I do know of one or two operators here in Zambia who do not, for instance, provide a client with a detailed investment proposal, or sometimes it's called a client report, which astonished me when I learned this. But it's a fundamental part of the process. So everything starts off with what we call a fact find. This is identifying with the prospective investor what financial results he has, what is his investment time frame, how long does the advisor have to work with your money, what are your goals, it's crucial, what are the needs. And if I was a client and somebody was doing a good fact finding with me, that would give me reassurance that the process was starting off in exactly the right way. That's the financial planning part of the process. If I'm investing a lump sum, am I presented with a risk profiler? And again, if you are, that's another box in the right way. And then the investment proposal. And this is the details of any analysis that's done for your personal situation. For instance, let's take a couple who have 3 children, and they want those children to be educated in South Africa. That's not uncommon. Now, the South African costs are known today, but one has to apply inflation to that to arrive at a figure that is a dollar or a rand figure that has to be created by the time each of those children turns 18 years old, which is the normal date for attending university in South Africa. So that analysis has to be done, and it has to be presented in writing. Then the details of the methodology by which the advisor is suggesting that you save and invest for that need. So that's details of the financial institution and the individual product through which you will invest. But it doesn't end there. You also need to know what the initial fund portfolio that you'll be in. There should be a fact sheet for each of those funds, and any indication, if necessary, of the risk of them. And then finally, we come to onboarding. And again, there are another 2 documents here. There'll be a terms and business, terms and condition document, which gives the main details about how your advisor is going to be working together with you. And then there should be an acceptance letter as well, which is your confirmation that you accept the investment proposal made for you. Now, if you are given all of those documents, you can be sure that you are dealing with a professional advisory company. So here's our conclusion for today. We started off by mentioning that this presentation broadly fits within the Security and Exchange Commission's mandate to help and support Zambian citizens in avoiding scams and fraud. Bullet point number 1, make sure you're only dealing with licensed and regulated investment advisors. Their personal details will be listed on the website of the regulator. And those advisors also have to have a physical office, which is registered with SPEC. So that's your first thing you do to check that somebody is registered and licensed. Remember that the regulators here in Zambia are genuinely your friends. They are working on your behalf. So please make sure that you follow SEC, the pensions and insurance body, and the Bank of Zambia on LinkedIn and other social media, because you will find there updates and news items which will help. And well, we've all had these, haven't we? I believe you me, I get a lot of them. So if you receive a phone call or a WhatsApp text or an SMS offering anything that sounds too good to be true, it ain't true. Believe you me. And you can always tell somebody phones you up or contacts you offering huge returns, tells you it's guaranteed. Well, there's very, very little, believe you me, in the investment world, which is guaranteed with a capital. So that's a warning sign immediately. Or offering you obscure non-Zambian stocks, which you're told you can buy for 20 cents each, and they're bound to be the next Microsoft or Apple. Well, be sure that they're going to disappear in 2 weeks' time. So, in all of these cases, block the number and make a report to SEC, because you'll be helping your fellow citizens and help the SEC do its regulatory function as well. And try to follow the advice given today in this presentation, if you can. There's a number of steps to go through, but if you do follow the advice I've given, I'm quite sure that you will end up having a happy experience with an advisor who is genuinely adding value to you. Investment is not a roulette wheel. It really isn't. Don't make it so. And by your own negligence, you can actually turn an investment experience over 1 year, 5 years, 20 years into a roulette wheel if you don't apply the rules. So try to protect yourself by following the advice given today. And I would mention one other thing, maybe, which is terribly important. We talked a lot about financial education, and I know it's something that our regulators here in Zambia are emphasizing time after time, and they are 100% right to do so. The more you, as a prospective investor, know about investment basics, the more you can spot the scammer or the fraud. So you owe it to yourself and to your families to educate yourself about investment. None of it's rocket science. The vast majority of it is the common sense and the application of common sense. But we all need to start somewhere, right? So you can get online, read financial education websites, and just enhance your knowledge of the international markets or the Zambian market, and that knowledge will inform your decisions about which advisor you work with and what kind of investment you make. So that's my presentation today, guys. I hope it was useful to some of you. I'm going to leave this slide up. If anyone would like a copy of that presentation, I'd be very, very happy to email it to you. So let me leave that slide up whilst I ask if there are any questions from anyone.
Thank you, Mr. Carter, for the lovely presentation that you made. And yes, according to the program, this is the part where we open it up to our various participants to ask any question. So from our end, just feel free to raise up your hand and your mic will be unmuted to allow you to talk. Thank you.
Yeah, I have had a question on text from an attendee. Are we able to ask questions relating to the registration and licensing of investment advisory companies? Yes, please go ahead and ask your question. No, maybe the individual who asked that question's got a little shy. Don't be shy. We'd be happy to answer.
Francis, I see your hand is up. Please, you may proceed to talk. I've unmuted you.
Thank you very much, Benedict, for your presentation. mine is just a contribution and also just to appreciate your presentation.
Thank you very much, Francis. Pleasure.
Yeah, this webinar was very, very insightful. And I think as investors, understanding your risk appetite becomes very, very cardinal in the investment decisions that one would make. Given that investments comes with different risks, I think the biggest issue now for investment advisors is to ensure that the risk profiling of these investors in a justifiable way, because this then will reduce quite a number of complaints, and also just to ensure that the investors are taking the right step and they've understood what they've invested in and what some of the possible outcomes would be in their investments. So I think you presenting on the issue of risk profiling was very, very important and cardinal. And I think it's one of the key takeaways that I have taken note from your presentation. So thank you very much, Benedict, for your presentation, and I hope everyone has gotten something to go out with, especially during this World Investor Week that we have launched. Thank you, Sichon.
Yeah, thanks very much indeed, Francis. And yeah, it's 100% true. We must risk profile our clients, and we must also provide them with full disclosure as far as we can on the risk excuse me, associated with any individual asset. So thanks for emphasizing that again.
Okay, Simon Souza, I see you have raised your hand. Please, you are free to talk. Simon, you've been unmuted. You may please go ahead and ask your question.
Thank you, Sichone. Good morning, Benedict.
Good morning, Mr. Souza. How are you?
Very well, thank you. Nice to catch up with you again.
Yes, indeed.
All right. So my question is to help the investing public. I want you, Benedict, to maybe demystify the fear that would-be investors have when they hear offshore investment, because where education is low among the public, and then just depending on what they hear about maybe the funny or bad experiences of those who tried to do an offshore investment at one time, then it sticks in their mind that offshore investment is a bad thing. In doing so, I want you to connect with the rules and requirements of maybe the Ministry of Finance through the exchange controls. Does it make investment offshore a good medium of investment?
Yeah, no, thank you for your question, Simon. There are different aspects to this, I think. First of all, I don't think we have here in Zambia any particular capital controls. Other countries in the region do. Zimbabwe is one. I think Mozambique is another. But thanks be to God, we don't have that here in Zambia. What we do have, though, is a lack of understanding about what investing offshore actually means. And I'm happy to offer a few thoughts. I think at its absolute basic, investing offshore just means exposing some of your wealth to the international markets. Usually it's done through a fund-based portfolio. but it might also be other types of assets as well. Offshore really means that it's a tax-free investment. So the money is growing free of any tax in the jurisdiction where the investment is based. And this brings us on to the subject of many, many, many offshore jurisdictions that exist nowadays. And it's absolutely true that if we go back 20, 25 years, some of them were pretty damn dodgy. They cleaned up their act absolutely enormously. So even some of the less fashionable offshore jurisdictions are now extremely well regulated. And close to Africa, the one that everyone would be aware of, I guess, would be Mauritius. They were not terribly well regulated a number of years ago, but they've really tightened up big time. And that's a quality jurisdiction now. Others that are in British waters, the famous ones like the Isle of Man, Jersey, Guernsey, and others, are extremely highly regulated, certainly to the same standard as the FCA in the UK or the SEC in America. So what are the benefits, I suppose, we ought to mention about offshore investing, and then what is the potential downside? I will mention that as well. The benefits to the African investor are, I think, having available to him or her asset types that are giving him some kind of protection against weak local currency and high inflation. And because if you're holding an asset in US dollars or sterling or euros, then you're hedging yourself in inverted commas to some extent against the any problems with the local economy or the local currency. But one has to be careful, because I think what has upset the apple cart down the years, and it's not just in Zambia, believe you me, has been the nature of the assets offered to the marketplace. These range from clunky, old-fashioned savings plans, where the client's money is locked into an investment, and then all of a sudden you need access to it. Maybe a family member has fallen ill or some other problem has arisen, and he finds that he can't access that money except at a penalty. That's one example. Another example, and by the way, I've come across Kenya to Ghana to here in the past, many, many examples of that. And another maybe less salubrious assets about which the risk-reward ratio cannot be measured. I have a personal thing about an asset type called structured notes. Now, structured notes are a bank-issued instrument which gives you a what-if scenario. If these stocks or whatever the assets are, usually it's a collection of stock, sometimes indices that make up this structured note, do this in this time, then you're going to get this reward. I refuse to market these products. I won't do it. Very often they do work, but I think the risk-reward measurement is really hopeless. And but my chief moan about them is that they are illiquid. There is a secondary market for them, but it's very small. So if you do need to recover your money before the maturity date, you can't. Or if you can, you'll be taking a massive hit on it. But more fundamentally than that for me is the fact that structured notes are an investment opt-out. They're an indication for me that the advisor cannot manage money, because if you can work with the fundamental asset classes of cash, bonds, equities, and nowadays we would have to include so-called alternatives, then you don't need to use structured notes at all. They were invented by banks to produce commissions for the bank. That's the sole reason they exist. So at Caravel, we won't market them. We just don't deal with them. So I think, Simon, to answer your question, there is this fear, there is an anxiety, there is a suspicion, but it all comes down to the quality of the asset mix and the products that the advisory firm can provide. Are they modern? Do they give access, good access without any penalty to funds? Are these people showing themselves in every way to be professionals? This is the key to it. And I come back again to that risk reward measurement. It really is central and important. And if your advisor is giving you full disclosure on an asset that he's investing to you, onshore or offshore, of course, then you can make an informed decision. And that's what it's about, providing people with the information they need to make an informed decision. So there's no reason to be suspicious of offshore. Just make sure you're dealing with the right person. That's what it really comes down to. But I would say at the same time about finding a legal representative or finding an auditor, whenever professional services are involved, you just need to make sure that you're dealing with the right people. That's it fundamentally. So I hope that answers your question at least partly.
Thank you, Mr. Carter, for answering Mr. Souza's question. For those that do not know, this is our first webinar for the World Investor Week 2024. And we have about 8 minutes to go. We started at 9:20, and this is a 1-hour webinar. So please keep the questions coming so that we can at least attend to all of them before the time elapses.
Thank you, Francis. I'd just say again, I have had a couple of messages from people who weren't able to attend the first part of the webinar. And I know that Francis has offered to email this presentation to, I think, Francis, the full registration list that you have. That's most kind of you, by the way. And so if you did miss the first part of the webinar, don't worry. You will be receiving a copy of it.
Okay, so for me, one of the key takeaways, Mr. Carter, that you presented, which was very much appreciated, was the fact that an investment advisor has to be regulated by the Securities and Exchange Commission. 2, they have to have a qualification from ZCPIT, and they must be a member of the Capital Markets Association of Zambia. And thirdly, they must meet with certain international standards, such as having a CISI qualification, that is a Chartered Institute of Securities and Investment qualification, to which the Securities and Exchange Commission signed an MOU with in 2016. So those are the 3 criteria that one must look out for when they are picking an investment advisor. I appreciate that point that you raised amongst your many slides that you did. Are there any other questions that that anyone in the audience would like to ask? I see we have about 5 minutes to go.
Francis, may I ask myself?
Hello, Mr. Carter. It's actually Sichone who's speaking to you.
Sorry. So
yes.
my question would be on behalf of those attending the webinar who are still online. From the SEC's point of view, how are you finding the hard work that you're doing with regard to taking out scams and frauds from the market? Are you, as a regulator, happy with progress? Is that going in the right way, would you say?
Hello, I see, I think Francis is on call right now. Francis, you may please go ahead and answer the question as Mr. Carter has asked.
Look, Sichone, are you able to get me?
Yes, I can hear you, Francis.
Okay.
You may please go ahead. Yeah.
Thank you, Mr. Carter, for your question. I think with the advent of technology, we've seen this trend of fraud and scam also increasing. This is not only in Zambia, but also just from the global perspective. Suffice to say that with the advent of this technology, which is actually advancing the progress in terms of the development of the capital markets in Zambia, the Securities and Exchange Commission has actually enhanced its mandate of developing the market by ensuring that issues to do with the awareness in terms of scams and frauds are being communicated to the right channel, to the right individuals who are the investors in the capital markets, and those they would be investors in the capital markets. And we're using various social media platforms, as well as the radio and the print media. So in terms of progress, I think we are heading into the right direction, but this cannot be done in silos. We are hoping like institutions like Carabao Partners and other institutions in the capital markets to also get on board in terms of sensitizing the general public that in as much as technology has come on board and is helping us to develop the market, there are also risks associated, and these risks like frauds and scams can actually plunge our market. So in terms of progress, there has been a very, very huge progress from the Securities and Exchange Commission. But as I earlier on alluded to, we also want you to be, part and parcel of our scams and fraud awareness, so that at least a good population in Zambia generally should be aware of the different approaches or methods to use in order to avoid scams and fraud in Zambia. So generally, that's what the Commission is doing, and we feel we're heading into the right direction. Of course, we're hoping that you too are part and parcel of this awareness.
Yes, thanks very much, and that's great to hear. And yes, we capital market players have a crucial role in this. Of course, we do. But also, I think for instance, all of the people listening to this webinar as well, it's a two-way process, which is why I mentioned in the presentation about when you do become aware of a scam or a fraud attempt, please do inform the regulator about it, because then they can take the necessary action, maybe in conjunction with other agencies as well. And they depend on the citizens of the country to have a dialogue with them, as indeed we must, players on the market as well. You can't leave it all to the regulator to do everything themselves. So thank you very much for that answer.
Thank you, Benedict.
Thank you, Benedict, for the question, and thank you, Francis, for that answer from the regulator perspective. And I must add that next month, the Commission will run what we are calling the Frauds and Scams campaign. And this campaign will also have exactly what Mr. Carter had mentioned, a special email where people will have the opportunity to at least report those cases that they are observing in the market. And this is definitely a collaborative work that must take all parties involved to ensure that we combat frauds and scams effectively. And also it must be mentioned that our recent MOUs that we signed with ZICTA and as well as DEC, the Drug Enforcement Commission, will see our collaboration further extend in terms of information sharing and staying ahead in terms of these digital times that we're in identifying scams that definitely will affect potential investors and erode in terms of eroding away their hard-earned money. With that said, looking at the time, I see it's 10:21 Central African time. We'll at this point end the meeting. Mr. Carter, we thank you for coming through and making that lovely presentation. As I guided via email, please feel free to share your presentation and we will distribute it to the rest of our network. Thank you for everyone else who participated. Your presence made this meeting a success. With that said, we'll end the meeting. Thank you.
Life? Sooner than later, you'll be getting married, having children, and you will need a home. Be smart by saving and investing for your key life events. The Zambian capital markets offer you an opportunity to invest in shares, bonds, and collective investment schemes such as unit trusts. If you would like more information about investing in the capital markets, ensure to seek professional advice from a stockbroker or dealer or investment advisor duly licensed by the Securities and Exchange Commission. Ensure to verify the validity of the license.
This advert was brought to you by the Securities and Exchange Commission, the regulators of capital markets in Zambia.